I have a very simple but yet very effective Forex trading strategy I want to go over with you today. What you have on the screen is a sample of a wave indicator that I use when trading stocks and Forex. Today we're going to focus on Forex to show you how it works. If you don't know how to set this indicator up, in the description below this video, I have a link to another video that shows you how to set this particular indicator up on your charts. It's extremely valuable indicator, works very well. Obviously nothing's 100%, but I think you'll see the value of this particular indicator as we go through it. First of all, you can ignore these dotted lines. These are weekly trend lines that I have for some other trades I have going on in the USD JPY trade. And we just want to all we want to focus on is the white, blue, yellow, and red indicators right through that we see right in the middle of the screen that's chasing the price action. You can look at RSI, but the way I trade this particular indicator for the Forex, you don't necessarily need it other than if you're looking for exit points. So we'll start, we got this major price action here, so we're going to start right in this area as I discussed with you how the wave indicator works. Now the first thing we notice right through here is the wave indicator is level. It's horizontal. So that tells us there's no real trend. So what we want to do is wait till we start to get a turn in the trend. Sorry about that. Anyways, we get the turn in the trend right here showing we're getting an uptrend start. Now what the secret to this particular indicator is you want to try to go long while the trend is going up, and you want to go long between the wave. So it's anywhere from the red to the blue on the upside, and the closer to the yellow the better. Yellow is kind of the main here that we're trying to get to. So your long entry here, you could have went long right here on this candle if you'd wanted to. Probably what I would have done is I would have put a long entry if it went over this particular daily candle. Now this indicator does work on any time frame, but I like it better on the larger time frames. And the fact of the matter is I like all my trades better on longer time frames. I do day trade, but most of what I'm teaching right now has to do with longer time frames, more swing trading. So I probably would have put my long entry above this candle here, which means I would have went long right here on this particular trade. So when do you get out? That's the next question that everyone wants to know. Okay, we're in the trade. First of all, where's the stop? Well, the stop is below the wave. That's typically where I'd put the first stop on that first candle, so it'd be somewhere in this area. Now, as the trade moves, I'll move the stop up. So after I got this big green candle, I would probably move the stop up to here, or to break even, or below the blue line or the yellow line as we start to ratchet it up, so we don't take losses, or at least we try to limit our losses. That's very important trading, not to lose too much money. Your wins need to be greater than your losses, so don't let a trade get away from you. That would be where my stop would probably go on these. And I say probably because there's a little bit of an art to it. I don't trade a system where I have set rules and I never change them, especially when it goes to profit targets. Now I do have, like I said, a maximum loss I'm willing to take, which on this trade would have been below the red line. As we look for profit targets, typically I look toward these white lines as profit targets. These are 2 ATR moves away from the mean. So I would have taken at least partial profit right through here. I would urge you to take partials and then just continue to move your stops up at least to break even, and then through here move them up to here, and just keep the blue line perhaps as your stop, since you've already taken a partial profit to get out. Let's assume, just for the sake of argument, if you took full profit right here, this move through 2 ATR, then you're out of the trade, so now you're looking for another entry. If you had placed a buy order right at the yellow line, you would have got long again right here. Sometimes I do that, and sometimes I wait for a setup like this where I get a candle, and then I can put a long above move over that candle. That's up to you as the individual trader how you want to trade that. You can do it either way. I have bought anywhere with, when it comes back into this area. Just be careful for a large move. Something like this could blow you up, so you got to be very careful if you do set those, that you got your stops. But if you did have a buy order set right through here, you would have went long with a stop down below the red. Again, you're looking profit target here and here, and then move your stops up. Once we got up to here, I probably moved my stop all the way up to here, and now I'm waiting for another long entry. You would have had two entries here. You could have bought at the yellow line if you'd wanted, just had a buy order there. You could have waited for this candle and went long right here with a stop below the red. Problem you would have had is if you didn't really hit your profit target up here. So if you'd moved your stop up initially to the red line, then up to the yellow line, you would have got stopped up right here. So you would have had a small loss there. Now, as you can see, this candle has broken through the wave. That indicates that there might be a change in trend coming on, which you did get here. So here you'd be looking for a chance to go short. Right here is actually, according to this indicator, a perfect time to go short. You would have been stopped out. This would have been a bad trade. The only thing that might have been a warning sign to us was you're starting to get a slight turn right here, like it's going to continue that uptrend. Now, that's one thing that's very important, is to look at that previous trend. Even when it pulls back, it may want to go back to that trend. So be careful, if you're trying to jump in a short right here, because that previous trend was a long trend, and it may be heading back toward that long side. So don't jump in too fast on those reversals. Now, once we got back into the long side trend, which was our previous trend, our next buy opportunity is, right in here. You could have done it as a buy over this, or you could have had a buy order set to automatically execute here with a stop below the red. You would have gotten a little choppy here. You barely hit a target here. I would have been moving my stop up at least to the yellow line through here, if not to the blue. But if you'd kept it at the yellow line, you would have hit at least a partial profit or full profit here, depending on how you wanted to trade. And then it's going to pull back into this area. This right here, again, is another buy opportunity to me. This candle worries me because there's a lot of downward pressure here, and there's a big wick here that's going down, and here. So if I had gone long here, again, my stop would have been right here at the red line. So, as soon as it hit there, I'd have been stopped out and been done. Now the trend, as you can see, has changed. Now we've got a downtrend, and it's starting to build momentum. It's above 2 ATR. We know it's going to pull back from that 2 ATR and back into the wave, because it's just too oversold right here, and you can even see that in the RSI. So we would have probably been trying to get go short somewhere in this area. Right here, again, around the yellow line is where we're looking for a short. You could have had a short order in. You could have waited for this candle and then shorted below the next candle and came down into here following your stops. Honestly, I probably would have closed this trade right here. I've got a small profit, but if you'd been using the wave as your stop and either the blue or the yellow line, you would have been able to ride it all the way down into here. Now, once we're out here or out here, then we're going to wait for another buy opportunity. We don't really get one here. Now, you could get aggressive and put a short right here, which is outside of the wave, because it did hit the red line of the wave. I probably wouldn't take that trade, but if you had a low risk trade or didn't want to put a lot of full position size on, you could take a chance right there based on that candle, possibly even this candle. Gone short, got out here at the 2 ATR range. It hit the 2 ATR range a couple of times, so I've been getting out there. You still got your downtrend. It would have come back up into here. This right here, to me, would have been another short signal. Probably a short below here is where I went short. We got stopped out right here. So I said, you've got to have a system that you can follow and that you understand, help you get in and out of these trades. But not every trade is going to be successful. And any trader that tells you that their system's 100% and they always make money, they're lying to you. And that's one thing I want to show you, going through this. It's a very good way to trade any security, but you've got to have rules. And you need a security that tends to trend. So you don't want a security that bounces all over the place, because this particular style of trading doesn't work in a really volatile, all over the place security. But on Forex, it tends to work pretty well because Forex trends pretty well. Right here, it's really choppy. We're not really getting a clear trend, so I probably would not take any of these trades. Obviously, this trade just blew it out, going down to the south, so I'm still going down out, but I still wouldn't take it. You could have gone short in here. You know, because you've got a downtrend, it's come back up into the wave. You could have taken a short, you know, anywhere in this area. Certainly, you would have wanted to take profits here, if not a full position off. If this huge candle that went down and then fought its way back up, I would have really ratcheted down my stops for anything I had left. Now we've got a reversal here. If you went short again right here, which you could have, your stop would have been here. Yeah, I would have seen this as a good short trade. The only thing that's a little concerning was this candle, and this is a big price zone here for the yen, and it bounced off. And as you can see, every time it's hit this price zone, it's taken off. It hit it here. My chart doesn't go back far enough to see the other time it hit it, but every time it hits right here at the 104.50, it takes off. So one warning sign you would have had would have been the fact that it hit the 104.50, and in history tells us it takes off after that, which is what it did. You know, it hit the 104.50, it took off, went long. Now you're looking for a chance to go long again. This candle was not a good long unless you just had a buy order in right there. You'd have been real close to getting stopped out here. You might even have gotten stopped out here for a loss. If you didn't, you would have come up and moved your stops up and probably got out around break even on this as it broke back down. And now you've got a downtrend, but it's choppy, and you're coming off this previous uptrend. So I would be a little hesitant to go back short here. I've been waiting for another long. And that's what you see here. We come back in here, you've got another long area. You know, you're right over the stop out here. If you had gone long and just bought here, you'd have got stopped out. The next thing I would have done would have been put a long entry above this candle right here, and that would have taken me long again, and I would still be in this trade had I been trading it. Let's take a look at the euro. You can tell it's a little more choppy. There's a little more price action through the wave in the euro, which is the reason I wanted to look at it. And we'll go back into this time frame. You've got a good downtrend, and you can tell you've got a good downtrend. You had a little bit of a reversal here, but you know the expectation would be for it to come back to this trend because that was the previous trend. You know, even here, slight bump up, but you're coming off of that downtrend. So I'd be looking for short entries. I probably would not take these long entries in here just because of this trend here. However, what you can see is if you were trying to set just we'll start here. You know, this, you know, traded down through, getting you back below here. You want to go short, but you don't want to go short down here. You want to go short right here. So if you had a short entry here, you would have got short, you would have followed it down. You never hit the 2 ATR on this trade. You've got a reversal candle right here, which you'd have to take a strong look at least for a partial exit. Probably would not take a full exit, but I would have looked strongly at a partial exit right here. And then you would have got stopped out either at the red or the yellow line, depending on where your stop is. So now you're looking for another short opportunity. You just got stopped out, so you don't want to jump in too fast. Just looking at candles, you know, this candle and this candle are both, you know, shortable. If you shorted this candle, then your stop's going to be right about here. If you shorted this candle, again, stops here. You're going to trade through here, probably move your stop down to the blue line of the wave. You're going to keep coming down, and then you're going to hit your 2 ATR here, at least take partial profit, if not full profit here, and then continue to move your stop maybe to the red. If you got out here, then you would have been looking at a re-entry probably right through this area. If you set your stop too tight, you would have got stopped out right here. And that would have been too bad because this was actually, you know, a decent trade coming back down. They got you close to the 2 ATR. You have a decision to make here. Do you want to get out? Do you want to stay in? You know, this is a scary, you know, candle. It's more of a reversal candles. You got to look at, you know, what you want to do. If you did get out, then you would have been looking for another entry right through here. But again, you know, where I normally put my stop is above this blue line. And if you look at what's going on in the euro, it'll hit that stop area fairly frequently, even if you've got a good trade. So with the euro, you got to be very careful how you set those stops. And I typically look at the security and try to make a decision based on, I can look back through here and I can see what's happening. It's following the wave, but it's getting a little over where my typical stop would be. Now with the yen, it didn't do that, so you didn't have that problem. So that's something to keep in mind. You've got to take into account what the security is and how it's trading. If you like this video, please like it, and please subscribe and turn on the bell notification so you find the next videos as I put them out. And we'll talk some more about Forex trading, a lot about options trading. If you have any questions, please let me know, and I'll talk to you next time. Thanks.